Gold Chronicles with Jim Rickards and Alex Stanzik. Insights and analysis about economics, geopolitics, global finance, and gold.
This is Alex Stanzik, and I have with me today the brilliant Mr. Jim Rickards. Jim, welcome.
Alex, great to be with you.
Jim, so in our last podcast, we covered a lot of different topics. We talked about everything from technical mountain climbing to training with Navy SEALs. We talked about the mindset required when making assessments of counterparty risk. For those of you who might be interested, you can access our entire archive of podcasts at our website at physicalgoldfund.com/podcasts. So let's dive into our topics here. The first one, we want to talk a little bit about gold. There's an interesting bit of gold industry news this morning, Jim. It turns out that Scotiabank is in the process of selling its bullion bank, Scotia-Mocatta. And for those of you who are not familiar with it, Scotia-Mocatta is a market-making member of the LBMA. And there are 5 full market makers of the LBMA. These include the usual suspects such as Citibank, Goldman Sachs, JP Morgan, HSBC, and UBS AG. There are another 8 what they call two-way market makers, of which Scotia-Mocatta is one. These bullion banks handle OTC trades in gold valued into the trillions of dollars. Scotia-Mocatta traces its origins all the way back to one of the first bullion banks, founded by a gentleman by the name of Moses Mocatta back in 1671. The rumor floating around is that the Chinese are being courted for the deal. I found it interesting to note this morning, Zero Hedge called the Chinese the world's dumbest money because of this. But to me, it lines up with an ongoing long-term pattern of Chinese state-run banks buying LBMA strategic assets. They've bought, for example, some of the largest vaults in New York, more of them in London. If they buy Scotia-Mocatta, it's going to be the second market-making member of the LBMA controlled by the Chinese. What do you think about all that, Jim?
Well, I think it's a very big deal. I'm kind of with you, Alex, in terms of the implications of it. I hadn't seen that particular news yet this morning, but I'm familiar with the LBMA and the institutions you mentioned and the setup. And yes, it's a very big deal. Step by step, China is, if not taking over the gold market, then at least putting a pretty big stake in the ground in terms of its ability to not only compete, but participate in the market making side by side with London. They're going to steal the business from London. I think they're probably more than halfway there. They have the Shanghai futures exchange, which includes a gold futures contract. They have the Shanghai Gold Exchange, which is spot gold. You take a gold in and get money, or go in with money and buy your gold. Their banks are among the largest gold dealers in the world. I think I mentioned in a prior podcast, I was out in Shanghai not long ago and met with 2 of the 4 biggest gold dealers in China, ICBC and another one of the top Chinese banks, and I got some first information from them. They're the largest gold producer in the world. They produce almost actually more than twice as much as the next highest producer. They produce about 450 tons a year, maybe on to 500 tons a year, versus I think the next closest is about 250 tons a year. So in every respect, and they're the largest gold buyer in the world. We know that from our friends in Switzerland, the refiners who sell the gold. So in every respect, they're the Bigfoot. And it reminds me of in the 1980s, I was in the U.S. government securities market. I was general counsel and chief credit officer of one of the largest securities dealers, and the Japanese were the biggest customers. So all the banks were, all the so-called primary dealers were U.S. owned, or some were owned by the U.K. or a couple other countries. But the Japanese were the biggest customers, and they did not have any primary dealers. And they said, wait a second, we're the biggest customers. We think we want to own some of the dealers. We want a front row seat. We don't want to just be on the receiving end of bids and offers. We want to be actual market makers and insiders and deal directly with the Fed. Well, that was kind of understood. Within a couple of years, they ended up with 5 primary dealers. China is something similar. If you're going to be the biggest customer, you don't want to just be a customer. You want to be a dealer or a market maker. You don't want to be disadvantaged. You want the inside price. You don't want to pay commissions and spreads and so forth. And that's exactly what they're doing.
Yeah, I have to agree. All right. So another interesting item, again, in the gold space is something that Mohammed El-Erian recently went on record with. So for those not familiar, El-Erian is the chief economic advisor of Allianz, and that is a multi-trillion-dollar global finance titan. Some of you may know him from PIMCO, which manages about $1.6 trillion. He was the CEO and co-chief investment officer there. Allianz is the owner of PIMCO. So in this interview, El-Erian said that central banks can't stay in the business of repressing financial volatility forever, and that gold will return as a safe haven hedging instrument. I thought it was an interesting comment. Jim, what's your take on that?
I agree with that, and you gave a sort of a précis of El-Erian's resume, and you're exactly right. Allianz is a huge institution. It's one of the largest financial institutions in the world, primarily insurance rather than banking, but they have banking-like functions and own PIMCO, which is the world's largest bond dealer, U.S. government bond, not dealer, but rather investor. But they also deal directly with the Federal Reserve. But he's more than that. I put El-Erian in the category of global super elite, meaning he's on G20 committees. He's at the IMF. World Bank meetings. He's a regular at Davos. He's more than he's a really smart guy. But apart from being having these important advisory roles in the institutions you mentioned, he is one of a handful of people alongside of Christine Lagarde and Larry Summers and Bob Rubin and David Lipton and others who really call the shots in the international monetary system. So, there's an old, I always date myself with these examples, but there was an old marketing campaign for a broker long gone called E.F. Hutton in the 1980s. And the punchline was, when E.F. Hutton talks, people listen. Well, when El-Erian talks, I listen because he is a true insider. So he's not just talking his book at Allianz. He's actually conveying something that is no doubt in the air, as I put it, among the elites. And so I would put a lot of weight on that. I think it's very significant. And I think he's right. Where you're going to go if they have to keep a lid on bond prices because governments are going broke, and if you have to keep a lid on stock prices because we can't afford another meltdown. I've actually observed the volatility in the currency markets. People keep saying, where's the volatility? I say, look at the euro-US dollar cross rate. I watched the euro-US dollar cross rate, and it has had 7 moves of 20% or more in the last 10 years. Now, people say, where's the volatility? I point them to the currency market because the U.S. dollar and the euro are the 2 leading global reserve currencies. U.S. dollar has the bigger share. It's about 60%. The euro's closer to 30% in terms of global reserves. But the 2 of them together are 90% of global reserves. And they're both supposed to be stores of value. And they both have, PhD central bankers. So why should they be moving 20% against each other? So there's the volatility. You're right. It's not, but it's because the central banks are fighting the currency wars, but using their bank policy to suppress volatility in the stock market and bond market and elsewhere. So look, something's got to give. The best way to understand this, and this is a metaphor, but it's also the same science. Imagine, 2 tectonic plates, like something like the San Andreas Fault, where you've got a Pacific plate and a continental plate, and they're butting up against each other. And you can go out and stand on the San Andreas Fault. I've actually done this. I've been out in the desert, out near Palm Springs, and my guide took me to the San Andreas Fault. You can see it. But the point being, the day I was standing there, nothing was happening. Well, that's fine. It doesn't mean it's stable. It's dynamically unstable. It's just not moving that day. But eventually the pressure builds up and it builds up and it builds up and then it snaps. And that's what I see happening in financial markets. And I think that's what El-Erian was referring to. When this snaps, there's going to be an enormous run to gold. And based on what we talked about earlier with the Chinese acquiring these dealer positions and exchange positions and so forth. There's not even close to enough gold to go around to satisfy all the existing paper claims, let alone future paper claims. So you would expect a very significant price spike.
Yeah, it's always been interesting to me, this idea of institutions, for example, moving into gold, because the amount of gold in the typical institutional portfolio, according to certain individuals who are professional money managers, or they're managing pension funds, et cetera. There's one book by a guy by the name of Shane McGuire called Hard Money, where he says that the typical, amongst his colleagues, he runs a really large pension fund. Amongst his colleagues, typically they've got less than 1% weighted allocation to gold. And if institutions, his thing was that if institutions moved more towards like even a 2, 3, 4% allocation to gold, that would significantly drive the price, right? Just from that alone.
That's exactly right. Actually, I know Shane. He's a great guy. He was part of a group that were instrumental and successful in getting the UTIMCO, University of Texas Investment Management Company, to do an allocation of gold. One of the big drivers there was Kyle Bass. I mean, Kyle Bass, very well-known hedge fund manager, but he's also a trustee at UTIMCO and lobbied hard for that. And they did buy $500 million worth of gold, which is a lot of gold, as you know. But it was still a tiny part of the overall portfolio. This is one of these, huge multi-billion-dollar portfolios. The entire university system endowment and any other state contributions to that. But that's right. These, I've always recommended for personal portfolio allocations 10% gold. And I get a lot of pushback on that. People are like, oh, Jim, you're the guy saying gold's going to go to $10,000 an ounce. Why wouldn't you have 100%? Well, there's an easy answer to that, which is you shouldn't be 100% in anything. I don't care what it is. And that's just not prudent. But I think 10% is fine. If nothing happens to gold or it goes sideways or down a little bit, you're not going to get hurt with a 10% allocation. But if it does anywhere near what I'm expecting, then that will be enough to, in effect, ensure the rest of your portfolio. So, and I know some people say 5%. That's fine. You can debate 10%, 5% all day long or more. But in fact, the institutional allocation is 1.5%, about 1.5%, not even 3%. And that's not evenly distributed. It's not as if every large institution has 1.5%. It's more the case that some guys have 5% and some guys have 0. So most institutions have 0. So with any kind of move at all, there's not enough gold in the world at these prices to meet that kind of demand. So they'll get their gold, but at much, much higher prices. And there's no reason for investors and our listeners not to kind of position accordingly today. You can definitely see this coming.
Mm-hmm. So for those of you who are listening who haven't read that book, highly recommend it. It's called Hard Money, Shane McGuire. Moving on. Next topic, Jim, is going to be the Fed. Janet Yellen seems to be having a hard time coming to grips with the fact that inflation numbers in the U.S. are actually in a downward trend. Her response, besides blaming it on a series of different issues, is that all of this is transitory. It's also not looking like she's going to be reappointed, and that has to be weighing on her mind. So, Jim, why does the Fed keep getting this wrong, and where do we go from here? Where do they go from here?
Yeah, it's a great question, Alex, and you're exactly right. Of course, probably the hardest thing for any of us to admit, whether you're Janet Yellen or me or anyone else, it's very hard to admit you're wrong. You have a model, you worked hard, you did the math, you studied, you went to school, you did all this stuff, and it turns out that everything you believed is just wrong. And that's the situation she's in. And the biggest thing they've got wrong is this so-called Phillips curve. Now, for the benefit of the listeners, Phillips curve is just a curve. It's a relationship or degree distribution between a couple factors. But basically, the idea is that there's an inverse relationship between employment and inflation, so that as unemployment goes down, inflation goes up, or as unemployment goes up, inflation goes down. And the theory is that as unemployment goes down, labor market labor markets get tight, it becomes more and more difficult for companies to find workers. So, I'm putting up a construction site, or I'm starting a new company or expanding my plan. I want to go hire people, but they're all working already. I can't find anybody. So what do? Well, I bid up wages. I offer to pay them more, and they'll come work for me. And the theory is that if the economy can only grow in real terms, historically we would have said 3.5%. Maybe today, that's under the new normal, it's 2%. But we start bidding up wages, 3, 4, 5% to get the workers. Anything over the maximum real rate of growth has got to be inflationary. If I pay you more than real growth, then you're going to go out and spend the money and bid up prices of other things, and it's inflationary. That's the theory. It's complete garbage. It's complete nonsense. It doesn't work that way. There's plenty of evidence to the contrary. Go back to the late 1970s. What did we have? We had high inflation, but we also had high unemployment. We had back-to-back recessions in 1980 and 1981. The one in 1981, which lasted into 1982, was the worst recession since the Great Depression. Now, we had a worse one, obviously, in 2008, but prior to 2008, the worst recession since the Great Depression was the one in 1981 and 82. And yet those were the days in the late 70s, early 80s of, 13% interest rates and 15% inflation, along with high employment. High unemployment. They had to come up with a new word for it called stagflation. Weak growth was stagnation, and high, rising prices was inflation. But here we had both, which wasn't supposed to happen, so they called it stagflation. Today we have the opposite situation. Unemployment is extremely low. It's the lowest it's been at least in 17 years. I think maybe you have to go back even further than that. We're down to around 4.2%. I haven't seen that in a very long time. And yet inflation is low. In fact, not only is inflation low, it's falling. We have disinflation. We're not quite to the point of deflation. So again, there are two examples that completely refute the Phillips curve. So you would think that Yellen would just, throw in the towel and come up with a new model, but she can't do it. She's been doing this too long. First of all, she's ideological, and she's overly academic. She's detached from the real world, and she's having this is what's called cognitive dissonance, if I want to put on my behavioral psychologist hat, and she just can't come to grips with it. And you're right about her list of factors. I wrote a column recently called Janet Rosanna Dana, and it was a reference to the TV character Rosanna Dana, played by Gilda Radner in the late 70s. But the shtick was she would have this long list of complaints. My stomach hurts. I can't get out of bed. And at the end of it, she would say, "It's always something." That was the punchline. It's always something. And I applied that to Yellen. She said, well, first, when prices kept going down, she said, well, there's a cell phone price war. Then she said, well, medical costs are government administered, so they're not responsive to monetary policy. Then she said the strong dollar is lowering import prices. And on and on and on. There was just like this long list of reasons, but all of it was to deny the fact that the prices were going down. Having said that, Alex, the upshot of all this is my forecast is that the Fed will not raise interest rates in December, which is very out of consensus, but also very bullish for gold. The consensus forecast right now is using Fed fund futures and implied probability is that there's an 80% chance of an interest rate hike in December. My model gives it about a 20% chance. And what I expect is that as we move down the timeline over the next 2 months between now and the December meeting, the markets will get the wake-up call and converge on that 20% level. When you have an expectation of a rate hike and the Fed doesn't hike, that's ease relative to expectations, and that kind of easing is very, very bullish for gold.
Yep, very good. So you heard it here first. I mean, this is pretty typical of Jim Rickards. Like he looks at things, he connects dots that typically the markets are usually catching up to a month or two after the fact, and I suspect that this is probably going to turn out no different. Oh, another thing that occurred to me, Jim, while you were talking about Janet Yellen basically being in an echo chamber, coming from academia, etc. It reminded me of all the many conversations we've had in regards to, PhD economists are basically, I don't want to make it sound extreme, but it's almost like a religion. It seems like a dogma to me. It reminded me of when you had spoken about Copernicus, where all of the scientists of the day believed a certain thing, but they were all wrong. I mean, Copernicus was right. Their models were wrong. But it was dogma. They were just clinging to it because of the echo chamber that they were in.
Yeah, I can't. I don't want to be 100% categorical about PhD economists. There are a few good ones out there. My friend Gail Fossler, based in Washington, is really, really good on business cycles. Sadly, I thought that the best economist, and he was a friend of Gail and mine, is John Macon. Sadly, John passed away a couple of years ago, but boy, do we need him now. John had an uncanny ability to call business cycles, and so that said, there are a couple I'm fans of, but not many. And basically, I consider PhD in economics to be a disability when it comes to understanding the economy. And of course, right now, as we record this, we're in the midst of the final beauty contest for the next chairman of the Fed. I think the listeners know that the five finalists are, would Janet Yellen be reappointed? Would President Trump pick Jay Powell, who's already on the board? He's a governor today. And there are three outsiders, Gary Cohn, head of the National Economic Council, Kevin Warsh, former governor, and has a couple appointments, but he's also chief economist to Stan Druckenmiller's family office, which was, formerly Duquesne. That was one of the most successful hedge funds in history. And the last one is John Taylor, professor at Stanford University, author of the Taylor Rule, which is a formula for setting monetary policy. I've said for the better part of a year, beginning last January, that it's going to be Kevin Warsh. So I'm sticking with that. But they set up these betting markets, and it's an interesting horse race because about a month ago, Warsh was leading, but then it's like, here comes Seabiscuit. All of a sudden, Jay Powell shot ahead because Steve Mnuchin, Secretary of Treasury, got on his side. But then John Taylor met with the president because the president interviewed all the candidates, and apparently there was a great meeting. And Trump loves John Taylor, and that gets leaked by the West Wing, and all of a sudden, John Taylor's odds are up, and Gary Cohn was ahead last summer, but fell back after criticizing the president publicly. Not a good idea if you're looking for a promotion. So, et cetera. So, and no one really thinks that Janet Yellen is going to be reappointed. So, look, it's a horse race. We'll know literally within days because apparently the president's going to make this decision before he heads off to Asia in early November. But my forecast is Kevin Warsh. I've said that since last January. Good reason to believe that's true. And we'll see. But one of the things I like about Kevin is that he's not an economist. He's a lawyer. And maybe I'm showing some bias because I'm a lawyer myself. But I find that, and by the way, he's also an MBA and investment banker. So I'm not saying he walked out of a law firm. He's got plenty of financial chops, and he was on the board of governors already. He was not the chairman, but he was there in 2008, 2009 during the worst of the financial crisis. He was part of Ben Bernanke's inner circle in dealing with the crisis. Whatever you think of what Bernanke did, Warsh was there on the front lines. I know from my own experience in 1998 with long-term capital management, when you're on the front lines, I negotiated that bailout. We were hours away from shutting every stock and bond market in the world. That's how dangerous it was. That's how close it came. Again, I, with others, while I was representing long-term capital, we negotiated that bailout. When you're in that position, you actually get to see the whites of their eyes, so to speak. You know how dangerous it is. You know all the things that are going wrong or could go wrong or almost went wrong, and how close the world came to just hitting a wall at 70 miles an hour. And Warsh had that experience in 2008, not just as an academic or a market participant, but as a true insider. It seems to me he's the kind of guy you want if it happens again, which it will. We all know it will. But I find that when lawyers turn to economics, they tend to be very good at it because legal training is all about problem solving. Right. You just learn. It's a benign form of brainwashing. No one goes through 3 years of law school. I actually had 6 years of law school because I got a second law degree. But you don't go through it without your brain coming out a little different at the other end. It's kind of like a North Korean re-education camp. But what they do is they train you to look at both sides of every problem. They force you to kind of keep an open mind. And that's valuable in economics. And that's the problem with Yellen. She looks at things one way,
Right.
is not good at balancing different views. And so that's why I consider it a disability. But I think Warsh will be a great choice. Look, the others will too. I know Jay Powell. I worked with him when he was when I was on Wall Street, and he was at the Treasury. And I don't know John Taylor personally, but every reason to believe that he would be a great choice. So I think whether it's Powell, Warsh, or Taylor, I think you got three really good choices on the table. Again, my expectation is Warsh.
Okay. So that brings us to our last topic. This is, I've been really interested to get into this with you, Jim. This is something that I think is going to be very interesting to discuss. Yesterday, you attended a meeting with a select group of people. I understand you had access to H.R. McMaster's, the U.S. National Security Advisor, as well as Mike Pompeo, who is the director of the CIA. And the meeting dug into U.S. national security interests issues as one of the topics, and I'm sure many others. But Jim, what are your key takeaways from this meeting?
Thank you, Alex. And it's great question. Yeah, I was in Washington yesterday. Spent 6 hours over the course of the day, from late morning to late afternoon, with Mike Pompeo, director of Central Intelligence Agency, and General H.R. McMaster, a national security advisor to President Trump. They're two of the big four. I would say the others would be Rex Tillerson, Secretary of State, and Jim Mattis, Secretary of Defense, who advised the president on these matters of war and peace. I have to say, Alex, I talked a few minutes ago about the bailout of LTCM, and I've had other kind of big challenges in my career. This is the hardest problem I've ever worked. When I say I'm talking about North Korea and the prospects of war and peace, absolutely the hardest problem I've ever worked. Lots of moving parts, partial information. That's always true in intelligence work. You never have all the information. If you did, it would be easy. What the challenge of intelligence analysis is reaching solid conclusions or estimates with partial information. And I concluded some months ago, and I did a series of interviews in August and September, saying that we would be in a war with North Korea by early to mid 2018. Whether it's a preventive war, which just means you're trying to stop them from developing their program, or a preemptive war, which is hit them before they hit you. That's an interesting distinction. But either way, the U.S. would start it. We would attack North Korea. It would be bloody and messy. It would not be a walkover. It wouldn't be shock and awe. It would be a really bad situation, but it was coming. But as I went through the month of September and October, I subscribed to Bayesian statistics, Bayesian mathematics, and among other disciplines, behavioral psychology and complexity theory and others. And one of the things you do as a Bayesian is you update. So, okay, I have a hypothesis. I've tested it. I've given it this probability. But every day you get new information, and the new information goes into the equation and updates the equation. And you have to keep an open mind. You have to do exactly what I said Janet Yellen doesn't do, which is to be nimble and be flexible and be willing to just say, you know what, here's where I was, but new stuff came in. I've updated. I've lowered the probability. I'm now in a different place. You have to be willing to do that. John Maynard Keynes famously said, when I get new facts, I change my mind. What do you do, sir? And it's a good rebuttal to people who call you a flip-flopper. Say, I'm not a flip-flopper, but I'm willing to update. So the point is, I said, well, what if I'm wrong? What if I've got this wrong? What if I'm missing something? I reached out to some CIA analysts and some people. It's like, well, you're not quite sure if they handed in their badge or not, but as one guy put it, they still send me pictures and ask me what I see. He's doing, signals intelligence. And so people who are very plugged in, CIA operatives, subject matter experts, scholars, people very immersed in the field. And what I was hearing consistently is, Jim, to quote Steve Bannon, they got us. It's too late. It would have been nice to stop this capability 6 years ago or 8 years ago or 2 years ago, but they've got nuclear armed missiles, whether they're reliable ICBMs, they're at least intermediate range missiles, whether they have 10 of them, they have at least one. They can use it, launch on warning, etc. And it's too late. If we launch this attack, they lob one over Tokyo or Seoul. Poor Japanese. I mean, I don't know why they're the ones always getting nuked. I mean, we dropped 2 bombs on them, and North Korea's getting ready to shoot another one. But that the casualties would be too high, the costs would be too high. We're going to have to engage in a long, drawn-out policy of deterrence and containment, not unlike what we went through with the Soviet Union in the Cold War. So I was hearing this a lot, and I was hearing updated information. One expert said, they don't have to test a missile in space to ruggedize it. They can put it in a wind tunnel with a rocket engine at the other end, and that gives you all the heat and vibration you want. And, so all right, well, you know more about wind tunnel testing missiles than I do. That's an interesting bit of information. And I kept going. Anyway, until last night, the night before I went into this meeting with Pompeo and McMaster, I had come around. I said, yeah, maybe Bannon was right. They got us. There's not going to be a preemptive war. But my takeaway was there's going to be a war. It's just a different kind of war. If we don't attack North Korea because they can nuke us, they're going to attack the South. They're going to attack South Korea and rely on their nuclear deterrent to keep us from doing anything. And then we might as well fold up our tent in the Western Pacific. So that's how I went into the meeting with Pompeo and McMaster. 6 hours later, I walked out. I said, we're going to war, because I heard it straight from the horse's mouth. And I have to say, Alex, as an aside, apart from the substance, I cannot tell you how refreshing it was to hear top policymakers speak in their own words for hours on end. It wasn't being filtered by CNN or the Washington Post. I mean, they'll cover it, but then they'll throw a quote here and a quote there, and then fill up all the space between the quotes with their own spin and fake news and everything, just to hear them. And by the way, as another side, they were both of them were extremely complimentary to President Trump. They said, he's got our back. Well, you're a 3-star general. That's a major statement. When you say someone's got your back, you mean he's got your back. Same thing with the director of the CIA. They're running assets. They're running paramilitaries, clandestine operations, spies, people in denied areas, people risking their life every day. When you say the president's got our back, that's a major statement. They said he's given us all the authorizations we need, and that has to do with, when you run covert ops, you got to get something signed by the president. They actually do it in physical copy. They drive it over to Langley, and the director puts it in a safe in his office and then goes and does all kinds of hair-raising stuff. And if he gets called out, he just opens the safe and said, okay, I was authorized by the president. They don't want a replay of what happened with the Church Committee in the 1970s. And so Trump has been very willing to sign those authorizations. They're conducting the ops. They're preparing militarily. But just to get to the point, now I'm going to read some exact quotes because I was there. I took notes and I have them in front of me. So here's a quote from Mike Pompeo, director of CIA. Quote, the president has made it clear that he will prevent North Korea's ability to hold America at risk by military means if necessary. So the two key words in that sentence, prevent, meaning they're not going to get there, and military means if necessary, meaning war. So that's from Pompeo. Pompeo, by the way, put a date on it, March 20th, 2018. Why do I say that? Well, he said 5 months, and yesterday was October 19th, 2017. Just to be clear, and by the way, those are his words, not mine. He said 5 months. He didn't say the war starts in exactly 5 months. What he said was it would be imprudent to assume it would take more than 5 months for North Korea to gain the capability, so that waiting more than 5 months risks them having the capability that we're trying to prevent, and therefore war would come on March 20th, if not sooner. And he also said, again, this is an exact quote, Trump has instructed the CIA to, quote, prevent Kim from having the capacity to threaten the United States. Again, key word in that is prevent. Now, let me turn to McMaster, National Security Advisor. He said, this is Kim's, and I'm quoting now, quote, last chance to avoid severe consequences. close quote. That was a reference to the ongoing diplomatic efforts. He's like, okay, if Kim wants to, verifiably give up his weapons development program, or if we have diplomacy bears fruit, okay, we can avoid it. But absent that, no, it's coming. McMaster also said, quote, "We are running out of time," close quote. That's consistent with Pompeo's 5 months. And here's the most important, two most important quotes from McMaster. He said, "Accept and deter is unacceptable." Just to shorten that, accept is unacceptable. Meaning accept North Korea as a nuclear armed power and deter them from using their power. No, he said accept and deter is unacceptable. Meaning we're not going to pursue a policy of deterrence and containment. We're going to prevent Kim from building the nuclear arsenal, which is what Pompeo said. And then finally, with reference to the April 6, 2017 meeting at Mar-a-Lago between Xi and Trump, again, exact quote, "China has a great deal of coercive power over North Korea. What's worse, that or war?" So in other words, China really putting the screws to North Korea. That feels bad if you're Kim. Maybe it's pretty uncomfortable for China. But again, exact quote, "What's worse, that or war?" Meaning war is the alternative. So I was actually stunned because you're so used to Washington figures, elliptical speech, euphemisms, buzzwords, saying nothing. And here were, two serious guys. By the way, Pompeo, just he's had a military career. He was first in his class at West Point. Now you would say, gee, first in your class at West Point, that's pretty good. He was also first in his class at Harvard Law School. He was editor-in-chief of the Harvard Law Review. So I'm like, wait a second. If you told me you were first in your class at West Point, I'd be impressed. If you told me you were editor of the Harvard Law Review, I'd be impressed. If you told me you were both, I'd be blown away. Well, that's Mike Pompeo, and McMaster has a highly decorated, distinguished military career. Again, 3-star general in the fight in more ways than one, and a totally serious player. They were blunt, they were candid, they were unambiguous. We're heading for war. So the only other talk I heard that I factored in, I found interesting, was assassination. And Pompeo was, it's not a funny topic, but he made a funny remark because someone asked him, well, would be engaged in the assassination of Kim Jong-un, a kind of regime change without a war? And he said, I don't want to comment on that because in case an accident should befall him, I wouldn't want anyone to think there was a coincidence. So it was very elliptical. I said, okay, I get it. It's illegal for the United States intelligence services to assassinate anybody, but that doesn't mean somebody else couldn't do it if we asked for a favor. So you take my point. And then I also talked to a CIA operative who told me that he had been working on a program for a device to cause Kim to have an unfortunate accident. It was a device that is not being employed because there would have been too much collateral damage. But it told me that, as we say on Wall Street, they were working the order. So here's my lineup right now. I would give a 20% probability to regime change, meaning Kim, has an untimely death, and some changes there. I would give it a 20% probability. That's probably high, but I'll say 20% that Kim gets the message and backs down, stands down, and we avoid a war because he gives up his program. And a 60% probability to war started by the United States preemptively or preventively before March 20th, 2018. And I give a 0% chance to we just live with it. They get the weapons and we don't do anything and we just contain it. So 4 possibilities: regime change, including assassination, Kim stands down, we go to war, or we accept a nuclear armed North Korea. And I would give them probabilities of 20, 20, 60, and 0 in that order. And so I'm back where I started, but at least I can credit myself for questioning my own assumptions and incorporating a lot of contrary views.
Sure. And, in the Kim stands down category, I read a really interesting article recently, and I had not known this about North Korea, but apparently the entire country they have this situation where they basically worship him and his now passed father. It's like it was a really amazing article. It basically said that there's one city over there, I think it's Pyongyang, is basically dedicated to the worship of these two individuals, and him backing down. It's kind of like the U.S. is the boogeyman that he has constructed as the great enemy of the people, right? And they're all unified behind that sort of an idea. So him backing down, I don't know. That just sounds like a tough scenario.
I agree with that, Alex, and that's why I put a 20% probability on it, and I was like, should it be 10 or you're never zero. You never want to be 0 or 100. That's just not good science. But I was stretching to 20. The only reason I got there was because the likelihood of war that I was hearing was so clear and unambiguous that maybe even Kim gets the message. So that's why I gave it a little higher probability. Maybe he will stand down. But I agree with you. That's the hardest thing for him to do. They have an official ideology. It's called Juche. And it's not quite communism. It's not quite it's a kind of totalitarianism, but it incorporates exactly what you just described, which is the cult of the individual and the personal worship of the Kim family. And you referred to his father, and that's right. But you really have to go back to the grandfather, because Kim Jong-un is the third generation. This goes back to Kim Il-sung, who is the founder of this Kim dynasty. And what's interesting is that Kim Jong-un reminds me more of his grandfather than his father. And if you go online and dig out some pictures of the grandfather when he was about 30 years old, striking resemblance to the grandson, to Kim Jong-un. So he really acts and looks more like his grandfather than his father. As far as he's concerned, of course, we all know the Korean War is not over. I'm talking about the war that was fought from 1950 to 1953. It's not over. There was never a treaty. There was an armistice, which is just an agreement to stop shooting, but it's not more than that. It's an agreement to stop shooting, meaning you can change your mind and start shooting anytime you want. So this war is not over. Kim Jong-un considers it unfinished business. There's no doubt that I say his top priority is personal and regime survival, and the second priority is reunification of the Korean Peninsula on his terms. And he's pursuing both, and he thinks the way to get both is with nuclear weapons. And the U.S., and again, I heard it from the National Security Advisor, who sits right down the hall from the president, that is not going to be allowed to happen. So my expectation, and I would price and organize a portfolio accordingly, is that we will be in a shooting war with North Korea before the end of March 2018.
Okay. Trump, here's a question about Trump. The sort of narrative that's going on right now in the mainstream media, most of the media stations that are out there, is that Trump is dangerous. He makes bad decisions. All of the people that are close to him are basically trying to contain him and his bad decisions all the time. What feeling did you get talking to Pompeo and McMaster about that? Do you get the impression that they're trying to run around containing the president, or do you get the feel that they are confident that he is actually making good decisions here?
It was more the latter. And Pompeo made this point. I was trying to pass along the specific quotes that had to do with war and peace, but as I said, this was 6 hours, and Pompeo said the president asks great questions. By the way, Pompeo personally briefs the president every day. As you know, there's a document called the PDB, the President's Daily Brief. It's top secret. It's compiled overnight on a daily basis by the CIA, and I've seen them. They come in like a nice leather binder, and someone gets in a car and drives from Langley to the White House, which is not a pretty short drive, and they have a couple copies. I think there were 7 or 8 people who get it. Obviously the Secretary of Defense, Secretary of State, but it's not widely distributed, highly classified, and they walk in and brief the president. Well, the the director of the CIA doesn't have to do that. If you're on a career path in the CIA, one of the prestigious jobs is the briefer, meaning you're the guy or woman who gets to brief the president. Obama was famous for not taking these briefings. I mean, the president doesn't take the briefing. And sometimes they'll take it once a week or twice a week. Obama was famous for blowing it off.
Wow.
Obama did not get briefed by the director. Trump's the opposite. He takes it every day, and he gets briefed by Mike Pompeo personally. Mike said, "I'm here. I'm in the White House. We were just Langley, of course, over in Northern Virginia. But we were just a few blocks from the White House." He said, "I'm here every day, and I brief the president personally. The president asks great questions. He challenges us. He makes us, if he has a doubt about something, he makes us go back, look at our assumptions. If there's room for improvement, we make the improvement." So I got the sense of a good dialogue, mutual respect, good interaction, a process working the way it's supposed to work. I didn't get the sense that Pompeo did adult supervision in a daycare center, which is how Senator Corker put it. Same thing for McMaster. Again, when a three-star general says he has my back, that's an expression of confidence. That's an expression of a relationship of deep trust. That's not an expression of someone who doesn't think well of the person or feels he's got to rein him in. So, look, I mean, Trump is Trump, and Trump's not going to change, by the way. People who say, why doesn't he stop tweeting? He's not going to stop tweeting. 70-year-old guys don't change. It's not going to happen. But, and to an exterior audience, Trump can be vulgar, shoot from the hip, ostentatious, name-calling, a little bit egocentric, a little bit spoiled. Yeah, that's all true. I'm not going to dispute any of that. But so what? I mean, that's not the substance of what we're talking about. We're talking about war and peace. And as I say, I heard from two of the big four. And what I heard were compliments, respect, and a good mutual working relationship, not an adversarial relationship, and not one where they felt that they had to, run a kindergarten.
That's good to know. And, just finally, wrapping it up with this comment of he's got our back, that's incredibly important. That is very close to my heart. As you know, like a month ago, I was in Colorado, spent some time with some former Navy SEALs, and we were doing some training. During one of the downtimes, one of them said to me, we were just kind of talking about how a lot of people in the military, some of the former administrations, they just didn't feel like they cared. They felt like they were expendable, that they were willing to be thrown into combat situations and just been torn to pieces, and that these administrations just didn't really care. And he said to me, it struck me, it was like a blow. He goes, what could be worse than a generation of Americans growing up that the leadership of America doesn't have their back and is willing to throw their lives away? What could be worse for a free nation than that? And that was like, wow, good point.
Well, that's very powerful, Alex. You're exactly right. And I'll just kind of add two things to that briefly. One is I've traveled quite a bit in my career, but I used to go to places that I would not go back to today, not without an armored car, in a platoon or something. But in the 1980s, the early 1980s, I walked by myself, unarmed by myself, in the streets of Khartoum and Omdurman in Sudan. I walked the streets of Karachi in Pakistan, Lahore, which is in northern Pakistan, closer to the frontier. And I felt completely relaxed. I knew there were bad actors around and bad people around, but Reagan was president, and I just felt like you won't mess with me because I'm an American, and Ronald Reagan has my back. I mean, I wasn't in the military. It's not like I had I could call in a helicopter evacuation, but I just felt that in general, they knew you were an American and they weren't going to mess with you because you were going to, because somebody was going to mess with them. And I haven't felt that since, as you got into the 90s and certainly certainly during the Obama administration. I wouldn't go back to Karachi today, like I say, without an entourage. I think it's too dangerous. I don't think they do have your back. Now, having said that, it's a new administration, and you're exactly right about the about the depth of feeling and the importance of that and how it affects kind of everything you do. And by the way, two more things on Pompeo and Master. Again, now I'm kind of putting words in the mouth a little bit. Everything I said earlier were direct quotes. I heard disdain from Mike Pompeo for General Clapper, former director of national intelligence. Now, just to be clear, Pompeo did not use Clapper's name. He used the phrase formers, meaning former director of the CIA, former director of national intelligence. We all know who they are. It's John Brennan and James Clapper. I had some interactions with Clapper myself that let's just say I'm not a fan. I'll leave it at that. But again, that's something you don't get from the newspapers. You only get from being in the room, which is it was just a disdainful remark. And I heard the same thing from McMaster. He said wishful thinking is not a strategy. And then in a separate part of the conversation, I'm paraphrasing here. I don't have the exact quotes in front of me, but good paraphrase. He said, we didn't have a strategy. We had a fantasy, referring to our approach to North Korea. So again, I would add that to this sense that not a sense, but this clear message that no more wishful thinking, no more fantasy, no more hoping for the best. It's Kim stands down, is removed, or we go to war.
Okay. Well, Jim, I appreciate your time today. This has been a great discussion, and I very much look forward to doing it again next month.
Me too, Alex. Thank you.
You have been listening to The Gold Chronicles with Jim Rickards and Alex Stanzik, presented by Physical Gold Fund. Recordings can be found at physicalgoldfund.com/podcasts. You can register there for news of upcoming interviews with Jim Rickards and other world-class thinkers.